Here's a mortgage scenario that's going to completely rattle your brain. I spoke to a client today and showed them that I could use my first lien HELOC strategy with an average interest rate of 10%, beat their 5.8% 30-year fixed mortgage. Most of you would never take a 10% interest rate, but I'm going to prove to you why this strategy still reigns supreme. So here's a scenario of what we're looking at for a potential purchase. $400,000 home with a 10% down payment. They looked at a lender that potentially offered them 5.8%. Their take-home pay every month is $9,000. They've got 45 grand sitting in a checking account that we're going to reallocate to our home equity line of credit. Remember, we use our HELOC just like we would our checking account. So $9,000 a month comes in every month. They pay their bills. And at the end, we've got $3,500 left over after everything's accounted for the month. So here's your 30-year fixed mortgage at 5.8%. Here's my first lien HELOC at an average rate of 10%. I can still beat this loan in 6.3 years, saving them $290,000 in interest. Just to prove my point with how amazing this loan is, here you go. Here's the average rate of what I'm using on this loan. And you can even see here as the rate breakdown. Year 1, 8.8, year 2, 9.9, year 3, 11, year 4, 12. And you can see it continues to get up higher and higher and higher till we reach our cap of 13.6. So with an average rate of 10%, I can still beat a 30-year fixed mortgage at 5.8%. Remember, interest is calculated based off the average daily balance. So in 6.3 years, we're only paying $109,000 in interest, which actually gives us an effective APR of 1.8%. And you can see here in 76 months, we owe absolutely nothing on our HELOC. We have access to this $360,000 line of credit. Or you can stay in your 30-year fixed mortgage at 5.8%, still owing the bank $325,000 because you would have only paid down $34,000 on your mortgage. Here's what's even more amazing. As we pay this home off in 76 months, in month 77, instead of continuing to pay mortgage payments, we're going to reallocate our principal and interest payment into an index fund, which typically returns 10%. You can track the S&P. So let's use that as our index. In that same amount of time, in that 30-year window that we would have potentially been paying mortgage payments because we fall in love with the interest rate, we now invest that money instead. That would be the equivalent of earning another $2.2 million just with one strategy. I'm going to say it again. It's not about the rate. It's about the strategy and how your loan is financed. A 10% HELOC beat a 5.8% 30-year fixed. Most of you would take the 30-year fixed. You have to start understanding how the game is played or else you're going to continue to be a slave to the bank.